So yeah, we got the last slot, unfortunately, today. So hopefully you're ready and willing to discuss tokenized real estate, which is a really interesting topic. We've had a lot of chat downstairs around real estate and the use case, but we're fortunate to have Nadav on our panel today, and Eddie, who's also doing a lot in real estate, but also out of Hong Kong, and then Amar from Goldman Sachs. Maybe we could have just a few seconds of introduction from each of you. Nadav, to start off.
So I'm the chairman of LRC. We manage 6 billion euros of assets, primarily residential, across Europe.
Co-CEO of Arta TechFin. We are listed in Hong Kong, DLT Finance.
Yeah, my name's Amar, so digital assets at Goldman Sachs, extremely focused on tokenization, digital money, and all the topics you probably heard about today.
So we've heard a lot today about real estate, tokenization. It's kind of the other end of the spectrum versus money markets and repo. What is real estate tokenization, Nadav, and why is it so interesting right now?
Right, so first of all, it's the biggest asset class in the world, and it's the most inefficient. It's archaic in the extreme. It's very difficult to actually move interests in real estate between people. And if you think about the value chain, if you think about the flow of funds, you start with rents that you receive from tenants, whether they're commercial or residential, and it goes all the way to the landlords and then the ultimate investors. And there are a lot of parties that are taking their cut in the meantime as the money flows through in what is an extremely inefficient, cumbersome process. Every deal is bilateral. Every deal is done with lawyers. And even though every deal is the same, it has its unique set of documentation, which then needs to be looked at every time you do a secondary trade as well. So the whole process is broken, and tokenization of real estate allow you to essentially ease it or standardize it, allow you to sell smaller fractions, so you can actually do smaller denominations and make it more accessible to family offices or individual retail. And if you think about it, the grand vision is just to imagine a barcode in front of every building. And you'll be able to scan it and buy a portion of it. And you will receive the income direct through the technology that we are enabling to your bank account. And if that happens, suddenly a massive asset class that is very much linked to inflation, cost of living, is enabled in your bank account. And I think that's revolutionary, and I think real estate, it's about 40 to 50% of our disposable income in terms of our expense, if you think about real estate and related real estate. And real estate is the place where most economic activity takes place as well. So overall, anywhere between 20 to 30% of GDP is actually transacted through real estate directly or indirectly. It needs modernization.
That's really interesting. Eddie? From you, obviously based out of Hong Kong, you see a lot of investors in Hong Kong particularly interested in real estate assets. What are some of the kind of key challenges that you would see in tokenization of real estate in Hong Kong, and how are you overcoming them?
Oh, great questions. By the way, we have to securitize before we tokenize, so we can't still need a lawyer, unfortunately. With that said, I think exactly to the point that you actually can become more efficient. There are three things that become more efficient. The way that you actually conduct transaction where you can use programmable money. So in Asia, CBDC is hot, less so here, probably stablecoin coming up. Some people want to use cryptos. Depends on which country or issuers, they may take it or they may not take it. Programmable money work with programmable investments, and if you don't make real estate a tokenized thing, then how do you connect the programs? So I think that's one major breakthrough. So we did something for the HKMA in Hong Kong this year. I can share more detail later. And interesting you mentioned the lawyer, because the lawyer always remind me, if I do a bilateral, interestingly, the interest is taxable. 15%, so I run, say I hold it in Hong Kong or on a BVI company, but the activity is in Hong Kong, so I'm subject to the tax regime in Hong Kong because it's a bilateral loan. If I collect 15% interest, I have to pay 15% on 15%. So you guys can do the math, 2.25. If I securitize it, then tokenize it, under they call it deeming provision or qualifying transactions, whatnot, I don't have to pay tax. This is no different from me buying a bond. So the process matter, saving money, saving time. We also do digital ID, but I can leave it later.
From your perspective, why are the banks involved in real estate? What's in it for you guys?
It's a really good question. So, I mean, I think most banks at the moment are all involved in tokenization, and I guess it comes back to the roots of why we look into tokenized assets, and it fundamentally is changing market infrastructure to make things more efficient, reduce risk. I think Emmanuel, summed things up into 4 buckets earlier as to why people, why do people focus on different initiatives? And it really is for us, there's obviously a commercial element to it, but there's a risk reduction element to it as well. And that risk reduction element has a knock-on commercial impact, just because from a bank perspective, it's deep-rooted in liquidity, capital, etc. So it all comes back to that component. But then equally on real estate, as Nadav mentioned, right, like democratizing finance is, the buzzword always used, but really fractionalizing assets down to smaller clips to be able to use them. I thought the demo with money market funds was great. It's another example of where you can really break things down into smaller chunks and actually open them up to a broader set of investors. So I'd say that's sort of the angle we're looking at things from.
You talked about liquidity, and often we see real estate assets as like the ultimate illiquid asset. Nadav, how is tokenization changing the sort of structure and liquidity requirements for real estate?
Right, so when we started 2-3 years ago, we looked at the entire value chain and said, how do we make the whole process of owning real estate more efficient? And we started by deploying apps to tenants so they can make the payments direct and we don't have to go through inefficiencies there. We then created an ERP system to put the data in one place and have one version of the truth. And then thirdly, we look to democratize or to actually have access to a broader market so that we can actually go and raise money instead of taking 9 months to raise a fund, to do it almost instantly against assets. And we looked for a lot of operators out there. Each of them operated a silo of tokenized assets. They all said to us, bring your real estate to me, I will bring buyers, but you have to be on my platform. And that was not a solution for us because we know that to grow a marketplace, you need to be able to address both the supply side and the demand side. And I think what we looked for in Ownera was this interoperability platform that connected existing banks. So we had 2 wins with one solution. One, we stayed within the existing regulatory regime because we're working with banks who are all financially regulated, so that the distribution would be to their clients, which are qualified investors, and they've gone through KYC. I don't need to deal with that. And the second thing that happened was that each bank had their own tokenization engine. And Ownera allowed us to essentially, in one swoop, address all the banks as distribution providers. The other distribution providers were people like Arta that were using some of the exchanges that are now members and are able to distribute those interests in real estate that we have to provide. And then we brought in our partners. We have altogether about 34 billion of assets that we're willing to put onto the system as soon as the rails are shown to work. And now they are shown to work. We're working with some of our partners in making sure we get to market. The critical point to mention is this interoperability will provide liquidity. And we know that. We've seen it in other models. We've seen it with market partners, which determine the price. We've seen it with standardization of products. We've seen it with the ability to actually make the tokens tradable, and then have immediate access to all those that demand it. One of the key statistics to keep in mind is that there's a massive move on the investor side to move up to 50% of their asset allocation to alts. And out of that, 50% to real estate. That's 25% of the entire savings amount moving to real estate. And that has to be efficient. It cannot stay with the current system. People cannot just buy enough. If you look at the REIT market, Vanguards, all of these guys, they're limit up. They can't buy any more REITs. It's not available. They have to go to private real estate now.
That's a really interesting point. Eddie, from your perspective, why is this market so attractive for investors?
Well, I want to talk about share a short story, short one, I promise. So if you roll back time in 2015, in mainland China, interestingly, they have already offered DLT-based asset-backed securities. And guess what the asset is? Construction loans. guess who provide the credit? State-owned enterprise. So I guess they won't go default. So they have been on-chain. So I've been a manager for the last 23 years, fund managers. And when we buy a receivable, especially construction loans, oh my God, document is that much. Go through one by one. And then when they expire, you go through another deck of documents, and guess what? That's the wrong trade, so let's go through another deck. When it's on DLT, so I started buying DLT-based ABS in 2018, fully regulated, on-chain, private chain. Guess what? Done. Because information is digitalized, the life cycle is digitalized. Whether it's on-chain or not is a different story. If it can be on a public chain or interoperable chain, then you bring in more liquidity. I think ultimately, if you buy something, you want to know what you're buying. And if you don't, being on-chain force basically the issuer to be construction loans or be primary sales, be secondary even transactions. You're forcing the seller, the issuers, to digitalize the data so that the buyer can research easier and the buyer can also track easier. And when the buyers sell, again, in the future, they know what price they're selling. I think that's pretty much what most of the Asian investor, while they love real estate, they want to make sure they earn enough yield. They want to make sure management fees still not too high. You want to know all this data, hopefully day by day, if not by month.
Yeah, it's always a frustration for me with the data that you get from your investments. It's all over the place and not transparent at all. So this obviously helps that. Amar, Eddie spoke about regulation, but we were talking offline about actually we love regulation because it gives us the guardrails in which to operate. I think for so long, people have been fighting against regulation and pushing for change. How do you see the new environment that we're working towards with the regulatory framework?
So I think, I've been in the space about 4 years now, and things have really progressed from, we went through the period of consultations, regulators asking what do we need to see, and now we're actually really seeing the output of that. The EU DLT pilot regime was mentioned earlier, the UK with the digital security sandbox. So I think we're really now at that sweet spot of those sandboxes being available, and they're really just going to help accelerate things like liquidity, which is so crucial in this space. A lot of the trades that have been done, things will trade on an OTC basis to begin with. We've got things live in production, which I think is fantastic. And now we can move on to that next area of scaling and liquidity. And I think regulation has really come a long way to help that. Bringing it back to real estate, and Eddie, you touched on this earlier. I think one of the things I always find interesting is when I first came across sort of real estate tokenization, I always used to think back to the land registry level. And I thought, the purest way to do this is the land registry should run a DLT network. And that's the way it should be. And you've seen small projects dotted around the globe where people are looking at that. But I think the other way of doing it, as Eddie mentioned, is, you put it in a wrapper, a legal wrapper. It could be a fund, it could be a piece of equity, it could be a piece of debt, and then you work your way down. There's regimes in depending on your jurisdiction, there are regimes in place to allow you to issue those instruments in a digital form. We just saw it with a money market fund, right? So it's really just working your way through the detail of those things. I hate to say it, but it's just working through the detail because the regulation and the legislation is there to be able to do these things.
I absolutely agree with that. I think you work within the framework and then look to turbocharge the agency roles that lie underneath. It has to be in a regulated way. Nadav, you were going to comment.
Yes, I wanted to say that one of the key guiding notes on the project that we're doing is that we have to work within the existing regulation. So we don't need change. We just need to adapt the technology to fit the existing regulation. The existing regulation is sufficient, and we can do the same as we're doing today, just more efficiently. If we standardize, the rest will follow. And standardizing the industry is the opportunity, and we're working closely with Goldman to create that standard token for real estate. And I think once you have that in place, whether you call it securitization or other name, it's the same. At the end of the day, standardization is critical. Everybody knows what they're getting. They're protected. We're doing everything right. And then one of the huge benefits of what we're doing is that we can actually standardize a unit that is an ownership in the real estate and then create all of the collateralization, funding, leverage on top of it. So that that you have at the end of the day a pure form of ownership in real estate which isn't susceptible to interest rate volatility or other things. It's just simple, and then put all the layers and complexities you want on top, and the banks can decide to sell these as products or as services.
To me, it sounds like there's a massive role right now for the service providers within those securitization industries to step up and also be part of this tokenization journey. Eddie, what other sort of key building blocks do you see for this to be successful?
Wow, that's tough questions. Thanks. So what we did for the central bank is basically, we said, look, we want the world to use digital currency, and we think it's important that we create a digital ID. Otherwise, you're going to write your form, fill out the KYC. We are fully regulated in Hong Kong as well. We actually carry, for some reason, 9 financial licenses, brokerage, asset management, banking, trustee, whatnot. So we have a lot of clients, and all these clients have to fill in KYC, AML, suitability, and KYT to a certain extent. You realize that if you don't build a verifiable credential, a digital ID, then you start with paper first or online form first, and then you go on-chain. That is inefficient. That doesn't work. So we're building decentralized ID in Hong Kong. Hopefully we'll roll that out as an international offer. So that's one thing. Technical challenge, not technically difficult, but regulatory-wise it's very difficult because it involves privacy, involves like how you share data between different parties. So say you have that done, the question becomes, how do you, again, facilitate, you have a standard real estate token, there's a standard payment token, how do you make it atomic? So, technologically, not difficult again, regulatory-wise, difficult. Who owns the token, who can provide a token service, etc. I think last but not least, in relation to real estate, where it becomes challenging is actually the negotiation. So it's OTC market. When we do credit, if we go back out today, there's no token, for example. We want to fund mezzanine loan. So used to be 15%, now we want 25. Okay. The issuer say, I don't want to give you 25, but I don't want to give you so much privacy, so much data. I want to make sure that you sign the NDA. I want to make sure that you go through the whole process so that we negotiate. I want to make sure that you provide a guarantee here and there. So it's bilateral by nature because the nature of the business requires negotiations. I think that part is quite hard to standardize. So I think that will be a major challenge to get to a widespread or a more popular use of tokens in general for real estate, given the bilateral nature.
Great, thanks, Eddie. Amar, like Goldman have been at the forefront of a lot of the tokenization that's been happening, and you're trying every different asset class going. In terms of, I suppose, the key roles and responsibilities that you see other market participants playing, where do you see the need for them to come to the tokenization party, so to speak? Like, which areas are relevant for you?
Yeah, I would say custody and trading, the 2 areas, right? And it comes back to interoperability, but not interoperability in the normal DLT to DLT sense, but interop between, I hate to say it, but like existing systems and now these new networks. We've launched GSDAP, a tokenization platform. We're live trading on HQLAX as well. And as I think many people have referenced it before that there's not going to be one solution that fits all, but I'm pretty confident that this isn't really going to scale if everyone's having to go out there and use 10 different user interfaces to trade different products, right? It's just still fragmented. So I think it's key from it might be from a trading venue perspective, from a custody perspective, to have that connectivity into what people are using today, because there is a big backbook of assets that, they're not just going to flip overnight. You need to manage the risk on a combined basis. So I think those 2 elements are key when it comes to plugging them into sort of existing institutions to be able to help aid scale.
Where do you see the real estate market booming and tokenized real estate market really taking off?
I think it's happening now. I think what we're seeing with all the real estate ETFs is a massive flow of funds into real estate. I think the demand is endless. Unfortunately, on the public markets, that cannot be satisfied, and it's already apparent. So what we're now bringing to market is the first kind of canary out there, and showing the market that it can be done in a simple manner. You can buy granular real estate today as a token. And I think what will come next is the Vanguards of this world or the BlackRocks of this world will essentially open up a product that allows you to choose where you want your real estate exposure to come and offer almost unlimited access to it via a very standardized mean without leverage. And then the banks can offer, or the same funds can offer leverage on top of it to create that excess extra income. So people will be able to allocate, to asset allocate, how much they want in real estate, how much they want in other private assets, and how much they want stocks and bonds with the same interface, not having to go to 10 interfaces. And they can do that in a capital efficient way. The other side benefit that exists from this, and this once people realize will create another boost to the market, is that if you actually tokenize real estate, for some funds, it means that they don't need to allocate 100% of capital against those assets. They can allocate 12% based on the Basel regulations or other regulatory capital requirements. So suddenly, if one institution has a much higher return on equity because they only need to allocate 12% to that asset rather than 100%, everyone will follow, because otherwise they'll have a lower return on equity. So I think that's going to come very, very quickly and will be a motivating factor for everyone to pile in. The problem with stocks and bonds at the moment is that they're just too correlated. The entire industry is owned by 5, 6 institutions who are basically moving the market up or down based on redemptions and not based on fundamentals.
Amar, we've talked a lot about interoperability today. No mic yet. We've talked a lot about interoperability today. How key is that going to be for liquidity going forward? And is this one of the barriers that are preventing the scale in the market at the moment, or is it going to start to take off now we're seeing solutions come into market?
Yeah. I think it's critical. Like I mentioned, a lot of the transactions up to now, you look at a lot of the bond issuances. We've done one for the European Investment Bank. There's been a few others they've done. They've all traded, I believe, on an OTC basis. Now, it's been great from an educational perspective, and they are meaningful transaction sizes as well, right? We're definitely out of POC territory. But I think the big barrier really stopping a lot of others jumping in is that they're not on trading venues. So I think Guido and Scott mentioned, we match plugging into HQLAX earlier. I think the more we see, existing venues plugging into, solutions and really making it easy for investors to purchase these instruments. And I think I always say that, even when we're talking about doing trades at Goldman, for our traders, I want it to be completely seamless, right? They shouldn't have that exposure to the underlying rails. For them, it should really just be booking as they book a trade today, but actually, hey, you can settle to the nearest minute and T0 as well. So I think plugging as much of the existing front-end infrastructure into these solutions while we're just sort of rewiring the back end is just critical. But again, it needs that interop between centralized systems and decentralized systems.
Eddie, what about for you? What do you see as the key challenge here, or the ability to actually do something different?
Yeah, first of all, music to the ear. I was a trader. I started 23 years ago. We in case you wonder why we scream all the time and we destroy the computer and keyboard, is because our trade don't settle. So it's fair all the time. Thank you. Wonderful. So interoperability. So what we did, Arta, our firm, with Chainlink in the US, San Francisco based. So they kind of, they supported all the DeFi platform. So last week during the was it last week? Yeah, 2 weeks ago already, time fly. During the Hong Kong FinTech Week, we announced that, the government, Hong Kong government support us and asked us to present our use case on the stage during the Hong Kong FinTech Week, which is, okay, let me try again. Cross-chain, interoperable, proof of reserve, fund token. And the fund token can be linked to anything. We will start with US Treasury for money market fund. And the next one is real estate. So cross-chain interoperable go first, proof of reserve go second, because we need to know the asset is right there. This is a regulatory requirement, and also it's important for our customer to know that they bought something real. So the question is, who are you selling to? After all, if you tokenize something, you do want someone to buy. So we reckon that there are 2 types of people in the world. The people who are generally older, who are new to tokens, and the people who are generally younger, who love tokens. And for some reason, they decided not to go crazy with the life again because crypto volatility is too high. They want to allocate US dollar. They just want US dollar. They say, I don't mind keeping 20% of my wealth in US dollar. So here is interesting. So the Solana guys say the same, Ethereum guys say the same, Bitcoin guys say the same. So what we did is we enable each of these community to have their own fund tokens. Again, fully regulated, interoperable, meaning that in case the Solana guy bought the Solana-based fund token and need money tonight and want to sell on-chain, and all these Solana people fall asleep, that's okay. The Bitcoin people are awake, sell to them. That's what trading value is about in so-called, more Web3 or non-centralized, or you can call it centralized, whatnot. So you have someone to sell to. Someone will show up and bid. So money market fund will be more liquid. Prices will be tighter. Real estate fund, depends. Real estate, equity, probably wider spread. But at least someone will show up to buy from you because the Bitcoin guy is still up. So that's what we're doing. I think if you don't have the Web3 people, again, in order to buy, all these people have to go through KYC, AML, and suitability, because this is a regulated fund token. And if we do in the UK, it will be UK law. If we do in Hong Kong, it will be Hong Kong law. So I think long story short, if you don't have the token lover to come up to do a regulated activity, again, technologically enabled, you are missing out a lot of liquidity. And obviously, with the upcoming institutional money, I was part of that. I was managing money with funds and banks. I think the two will match and they will meet, and that's where it gets really interesting.
Nadav, we've seen some interoperability solutions come out that talk about sort of interoperability, but actually what you're doing is you're wrapping some of those tokens and then issuing new tokens. And we've seen examples in the Web3 space where tokens have gone missing and no one's able to access them. Eddie mentions a good point about having that view on where your assets are and making sure that you trust the ledger. I think, what are your views on that as someone doing the tokenization? How would you feel if someone burnt and mint your token?
Right. So when we talk to the demand side, the first thing we highlight is the fact that we're not changing anything in terms of the ownership perspective. So every token we issue is held with a transfer agent. It cannot be stolen. It's not anonymous, and it's not a crypto. It's the same as it was before. It's just more efficient. And the keeper of the ledger is now actually distributed between the custody agent. In the case of Goldman Sachs, Goldman will have a piece of the ledger. So we're actually creating more redundancy in the system. It's safer. And if somebody steals your token, you can always go back and register it as register yourself as the new owner. This is critical. So trust is a threshold point. It's not even a question. You have to establish the fact that we're not doing anything different. We're simply standardizing, making it more efficient, and allowing you to trade with atomic settlement.
Thank you. We're nearly out of time. Everyone's going to be very hungry now. So I'm just going to close with some final thoughts from each of the panelists, actually. In terms of the evolution of tokenized real estate in the short term and mid-term, where do you see this going, Amar?
Yeah, I just think, cliche to say, the potential is significant. I think the market's in a good place now, be it with sandboxes, be it with other solutions, tokenizing bonds, for example, which are already live and out there, be it money market funds. So I think everything's primed and ready to really, move into that asset class. And as Nadav said, it's one of the biggest asset classes in the world. So I think it's just really center stage now to take it forward, whilst that's not sort of putting to one side all the progress across other asset classes we're seeing, right? There's still a lot of work to do when you think about tokenized bonds, right, to get liquidity up and running. But I would say there are headwinds, right? Digital money, I think, does need to progress. I think there's a lot of good progress being made, the likes of Finality, the ECB, focus on central bank money, digital central bank money as well. And then also consistency from a regulatory standpoint. We talked about the stages set for things to happen in jurisdictions, but I think what will soon come to the fore is differences in jurisdictions. And that will need to be addressed at some point as well.
Thank you. Eddie, you?
Yeah, so I'll be too old for those jobs, but if I were looking for jobs again, like fresh out of college, say, I interview with Goldman Sachs or UBS, So investment banking. I will be quite sure I want to know tokenization, DLT. I want to know, make sure that I help the banks to build an efficient securitization platform, which can be tokenized also eventually. Because we're going to push out a lot of small deals. Maybe this building tonight. I want to push it out. I want to securitize it. I can't be going to a lawyer and then auditor and then, transfer agent, trustee, and then, oh my God, like the document is that fake. I mean, I do private credit, by the way. So this fake, oh my God. I mean, and then every single building is like this. So banking these days has to be quick, fast, efficient, and it will be a new skill set or new types of people that they will hire.
Got 10 seconds. Tell us the pitch.
Ernst & Young have just published a report on the demand side, looking at high net worth individuals, family offices, and fund managers, and asked them whether they'd be interested in investing this year and next year in digital assets. The vast majority said they are, and then they asked them, what would you like to invest in? And they said real estate and private equity. The future is now. It's coming, real estate is here, and it's going to be the biggest tokenized asset class by far.
Yeah, great. Thank you so much. Thank you, everyone, for joining us at this late session.